Welcome to this video on swing trading the stock market using Bollinger Bands. And today I'm going to show you a very simple technique. And I like this. It works. It's about the simplest thing you're ever going to learn. So let's just jump right into it without any further ado. So here is the point. First of all, look over here at the top and you'll see that I'm using Bollinger Bands with the settings of 2 and 14. 2 and 14. Different people use different settings, but that's what I use for this technique. And it's very simple. It's basically a technique that finds markets that have gone into an extreme extension of an impulse move. So we're looking for exhaustion. It's basically an exhaustion pattern. And it doesn't show up super frequently, but when it does show up, it's usually pretty good. And here's what it is. It's very simple. The real body of the candle gets outside of the Bollinger Band. So in this case, it gets below the lower Bollinger Band. Now, I like to have the real body, that means the entire green, or in this case, the entire red, here we have 2 bars, outside of the Bollinger Band. I don't care about the wicks or the shadows, that can be touching, but I do want the real bodies outside. Now, this is not a trend trade. This is a quick little scalp trade. There's basically 2 types of categories of trades. I guess you could say there's more categories, but 2 of the most popular are trend trading and reversion trading. This is more of a reversion, and this, I don't really use the middle Bollinger Band. This is the 15 EMA up here, and it's just looking for it to revert back to a mean, reversion to the mean type of thing. Okay, and eventually it does, gets over to the 15 EMA over there. So that's it. But that's so simple. Let's look at a few other examples. So here again we get another one. All right, and there you go. It's outside the Bollinger Band. Oops, I think the red one was 2. Let's see. Yeah, and then it comes back down. By the way, the thicker line that's red and green, that's the 50 MA. So sometimes it'll revert back to that as well. All right. By the way, one way to use this, you see the moves are not real big normally. Sometimes they will be, but normally I wouldn't expect it. So again, it's an exhaustion pattern and a reversion to a mean. Now, you can test different moving averages if you'd like to. These are the ones that I use, 15 EMA and the 50 SMA. And one way I like to trade this is for swing trading, as the title indicates. So this is a great thing if you want to scan for markets. Set up your scanner to look for markets where basically what you could do is the open and close is greater than, the Bollinger Band at that setting. Okay. Sometimes like this, if it's just barely touching, I'll still take it, by the way. I'm sure there's somebody who noticed that. Okay, here's another one. So you can see about how often it sets up. This is a daily chart. But if you're scanning the market, all the stocks in the stock market, then you'll find a bunch of these. So there we go. The entire real body of the candle is below the Bollinger Band. And what's it do? Retraces back to the mean. And then after that, it just kind of goes sideways, goes choppy. So that's it. That's your trade. I like to do this with options, by the way. That's what I prefer to do. Doesn't mean you should do it. But it's a good little quick option trade. Like I say, it's just a swing trade. Swing trading originally meant just 2 or 3 days. And that's kind of how I look at this as well. Very short term, little kind of scalp trades, if you will. Let's find some more here. Just scrolling through so we're not cherry picking. There we go. There's another one. This red bar is entirely below the Bollinger Band. And it kind of hesitates a little bit, but it gets back up to the 15 EMA. Sure enough, it does. So that one worked. Let's see. Let's try to find some more here for you. Oh, now good. Here's one. I say good, but actually I do like this. So here's one that did not work. All right, this one here, you see the entire real body is below the lower Bollinger Band, and that one did not work for our purposes. Does not revert back to the mean. In fact, it's an impulse move that just keeps going down. Right? So that's good to see. I actually like to, in my courses, I always show examples of trades that I teach that didn't work out, because I want you to get that in your brain cells that nothing works all the time. I don't want you to have false expectations or unrealistic expectations. I want you to see the times that things don't work. Okay, that's it for that chart. Let's bring up another market. Okay, so yeah, there we go. All right, here we go again. Let's see here. So here's one. And that one worked out real nice. Actually, that's part of a trend. And so that worked out real good. Let's find another one. Might be missing some here because I'm just going through it real quickly. You might see some that I don't. Oh, actually, I see one over there I missed. So there's one right there. And that's also at a wave 5. Now, that actually prompts me to, these last two examples prompts me to remind you of something else. You want to use this in conjunction with other things that you've learned. So support resistance, cycles, trend, candlestick pattern. So if you get a nice reversal candlestick pattern down here, obviously that's going to add to the probability of success. Here's another big one. All right, so that one again completely is outside of the Bollinger Bands, reverts exactly back to the 15 EMA. So this is a little golden nugget for you, really. I find this to be very effective. And you're not going to see it too much when the markets go into contraction or consolidation, of course. Actually, yeah, kind of funny I just said that. And it starts to break out of consolidation, and we get a little one there. And sure enough, boom, right back to the 15 EMA. Remember, this is just a scalp trade. Don't take these for long term. They're normally not that. And that is all she wrote. Well, there might be a little one right there, too. Okay, so, you know, that's it. It's pretty simple. Like I say, I would apply any other knowledge that you know, but the way I like to use this is to scan for these. I use stockfetcher.com, and stockfetcher, I have no, by the way, material connection with stockfetcher. So that's a good one, but there's many good scanners out there, and you can program this in. I don't have it for you, so you can just, you know, whichever program you use, you'd have to use that programming language. I don't have programming language for all the different scanners, obviously. StockFetcher, you just write in English. That's why I like it, because I'm not a programmer. So if you like this video and you're watching it on YouTube, please click the thumbs up icon below and leave a comment, because that encourages me to create more tutorials for you. Also, I'm giving away another one of my favorite trade strategies. It takes a little more than just 6 minutes to teach, though. This one takes about 26 minutes, and it's a very, very good win-loss ratio. It's called the rubber band trade, and you can get it absolutely free by clicking on the image in the top left corner, or if you're on a mobile device, click on the little eye with a circle around in the top right-hand corner of this video. And if you're not watching this video on YouTube, then there's probably a link below or an opt-in form on the side. Once you do one of those things, I'll personally email the video to you, and you can start enjoying it and has it as my total gift to you.